Question 51. What would be an expense factor in an insurance program? A. Premiums collected. B. Mortality costs. C. Opportunity costs. D. Investment interest. The key word here is expense. The insurer's costs to run the program, like paying claims and administrative expenses, are expense factors. Answer: B. Mortality cost. Question 52. What distinguishes a deferred annuity from an immediate annuity? A. The time at which benefit payments start. B. The benefit payment amount. C. The taxation of benefit payments. D. The age at which the annuity can be purchased. The big difference is when you start getting paid. Deferred means you wait. Immediate means payments begin right away. Answer: A. The time at which benefit payments start. Question 53. How soon can the benefit payments begin with a deferred annuity? A. Anytime after date of purchase. B. Anytime within 12 months after date of purchase. C. A minimum of 6 months after date of purchase. D. A minimum of 12 months after date of purchase. Deferred, delayed. You have to wait at least 12 months before payments can start. Answer: D. A minimum of 12 months after date of purchase. Question 54. A unilateral contract is one in which A. There is an element of chance and potential for unequal exchange. B. Only one party, the insurer, makes any legally enforceable promise. C. The contract has been prepared by one party with no negotiation. D. Both parties must know all material facts. The word unilateral means one-sided. In insurance, only the insurer makes a promise to pay a claim. Answer: B. Only one party makes any kind of legally enforceable promise. Question 55. The systematic liquidation of a sum of money is provided by AN. A. Annuity. B. Endowment contract. C. Life insurance policy. D. 1035 contract exchange. Systematic liquidation means turning a lump sum into steady income over time. That's exactly what an annuity does. Answer: A. Annuity. Question 56. An insurer's claim settlement practices are regulated by A. Securities and Exchange Commission, SEC. B. National Association of Claims Adjusters, NACA. C. National Association of Insurance Commissioners, NAIC. D. State insurance departments. Each state has its own rules for claims, so it's regulated at the state level. Answer: D. State insurance departments. Question 57. All of the following are examples of a business continuation plan, except A. Key person insurance. B. Cross-purchase agreement. C. Stock redemption plan. D. Deferred compensation. Business continuation protects the business if an owner or key person leaves or dies. Deferred compensation is about employee benefits, not continuation. Answer: D. Deferred compensation. Question 58. Over the course of a year, which premium payment mode is most expensive? A. Monthly. B. Quarterly. C. Semi-annually. D. Annually. The more often you pay, the more fees you pay. Monthly ends up being the most expensive overall. Answer: A. Monthly. Question 59. Which of the following types of information is not required for a life insurance application? A. Health history. B. Ethnicity. C. Occupation. D. Hobbies. Insurance companies can't ask or use your ethnicity in underwriting. Answer: B. Ethnicity. Question 60. What is a participating life insurance policy? A. Agreement that allows two or more beneficiaries to share in the death benefit. B. Contract that gives beneficiaries the right to participate in any dividends. C. Contract that allows the policy owner to receive a share of surplus in the form of policy dividends. D. Agreement that insures two or more lives. The key word is participating, meaning the policy owner participates in the company's profits through dividends. Answer: C. Contract that allows the policy owner to receive a share of surplus in the form of policy dividends. Question 61. which describes the increase in probability of a loss due to an insured's dishonest tendencies? A. Morale hazard. B. Physical hazard. C. Moral hazard. D. Speculative hazard. Moral hazard means bad behavior, when someone might act dishonestly or carelessly because they're insured. Answer: C. Moral hazard. Question 62. Which of the following is not a primary objective of insurance regulation? A. Insurance code enforcement. B. Licensing agents. C. Protect policy owners. D. Interpret policy provisions. Regulators don't interpret contracts. Courts do. Answer: D. Interpret policy provisions. Question 63. A life insurance policy that pays the face amount if the insured survives to a specified period of time is called A. Universal life. B. Endowment insurance. C. Modified life. D. Whole life. Endowment means you get paid if you live to a certain date, not just if you die. Answer: B. Endowment insurance. Question 64. How are acts of war considered under a group life insurance policy? A. Optional rider. B. Policy exclusion. C. Covered hazard. D. Mandatory provision. Acts of war are almost always excluded from coverage. Answer: B. Policy exclusion. Question 65. What does the term illustration mean in life insurance policy illustration? A. Publication designed to help an applicant reach an informed decision. B. A copy of the sales materials used. C. A copy of the free look terms. D. Presentation of policy features that includes non-guaranteed elements. An illustration shows how the policy might perform, including things not guaranteed. Answer: D. Presentation of policy features that includes non-guaranteed elements. Question 66. Premiums are best described as A. Money paid by the insurer for settling a claim. B. Money paid by the insured to acquire a policy's benefits. C. The amount an insurer charges per unit of coverage. D. Commissions payable to the agent. Premiums are what you pay to keep your policy active. Answer: B. Money paid by the insured to acquire a policy's benefits. Question 67. Mike has inherited his father's traditional IRA. As beneficiary, he will pay taxes on any money withdrawn. A. Estate. B. Probate. C. No. D. Income. Traditional IRA withdrawals are taxed as income. Answer: D. Income. Question 68. If an insured's age on a policy has been misstated, what is the insurer's liability if the insured dies? A. No death benefit is owed. B. The full original death benefit. C. A prorated death benefit based on correct age. D. The original death benefit minus loans and interest. If the age was wrong, the insurer adjusts the benefit to what those premiums would have bought at the correct age. Answer: C. A prorated death benefit based on the correct age. Question 69. What is considered the definition of disability according to Social Security? A. Unable to engage in the worker's chosen career field. B. Unable to engage in any substantial gainful activity. C. Unable to perform duties in the worker's occupation. D. Unable to perform duties in similar fields. Social Security's definition is very strict. You must be unable to perform any substantial gainful activity. Answer: B. Unable to engage in any substantial gainful activity. Question 70. Restoring an insured to the same condition as before a loss is known as A. Law of large numbers. B. Fiduciary retention. C. Adverse selection. D. Principle of indemnity. To indemnify means to make whole again, not profit, just restore. Answer: D. Principle of indemnity. Question 71. Which is a type of insurance where an insurer transfers loss exposures from policies written for its insureds? A. Treaty insurance. B. Reinsurance. C. Mutual insurance. D. Captive insurance. Reinsurance means insurance for insurance companies. It spreads the risk. Answer: B. Reinsurance. Question 72. Karen is a producer who obtained personal info about a client without a legitimate reason. Under the McCarran-Ferguson Act, what's the minimum penalty? A. $0. B. $5,000. C. $10,000. D. $15,000. The minimum fine under that act is $10,000. Answer: C. $10,000. Question 73. Pat owns a 20-pay life policy with a paid-up dividend option. Which statement is true? A. The policy may be paid up early by using accumulated cash values. B. The policy may be paid up early by using policy dividends. C. Premiums increase after 20 years. D. Cash values steadily decrease after 20 years. Paid-up dividends can be used to finish paying the policy early. Answer: B. The policy may be paid up early by using policy dividends. Question 74. According to the California Insurance Code, what is insurance? A. A contract. B. A transfer. C. A hazard. D. An agreement. Insurance is legally defined as a contract, a transfer of risk, but officially it's a contract. Answer: A. A contract. Question 75. Most U.S. life insurance companies belong to the A. Medical Information Bureau, B. National Association of Insurance Commissioners, C. Underwriting Information Bureau, D. FINRA. The big one that most belong to is the Medical Information Bureau, MIB, helps share underwriting info. Answer: A. Medical Information Bureau. Good luck on your test. See you in the next video.